Hello traders, welcome back to another video. This video is going to be on a blueprint to planning your next trade. This is the third Conquer FX webinar, and I want to thank you so much for the support already across the YouTube channel. We've been meaning to do YouTube for quite some time now, and we eventually kind of took that jump and started creating some content for you guys on some important topics that I believe will help you over the long run. Now, there's two things I want to start off with. First of all is, could you please subscribe to the channel and please like this video. It really just takes 2 seconds to just get out of full screen mode and just press the like on the channel. We'd really appreciate it. And secondly, try to actually sit back and take notes, okay? You might not find something in the first 5 minutes, you might understand the topic in detail, you may already be good at planning in general, but there might be that one thing that might have a significant effect on your trading that could be in this webinar that may help you in your trading over the long run. So if you sit back and listen, and the problem nowadays is that the majority do not have a strong attention span at all. We usually will, after about 4 minutes, jump out of a video if it isn't eye-catching enough, even though it may be full of information that is valuable to them. So I would really for any educational video, any course you're doing, a YouTube video that may benefit you, take the time to actually go through it. If you need to come back and continue to watch it, do, but take some notes and try to learn something from it. So yeah, overall, take some notes, and if you could hit that like button, we would really appreciate it. So let's just get straight into things, okay? So as you know, we have the Conquer FX Instagram page, and on a day-to-day basis, I could get up to 20-30 messages, people asking for different bits of advice on their trading plan, problems they may be having on a day-to-day basis as well. But one that usually comes up, and it's usually a problem that I have to identify to people, is that they lack planning. Such a simple part of the process, but one that is quite overlooked, because it's sometimes when beginner traders come into the markets, they get so, best way to say this? They get so excited with having to place their next trade that planning goes all out the window. Why? Well, first of all, there's a few reasons for this. First of all, they're not treating it like a business. They're treating it more like a game. They're treating it like, I need to make money quick. But think about it. When you have a business, you have a business plan. You're planning your marketing strategies. You're planning, how much money you're going to put into this marketing plan or whatever it may be. And you have exit plans. You have how we are going to launch this. Everything is planned from start to finish. And trading should be the exact same. Trading is a business, and we should be planning where we want to enter. What will we do if we have signs of, what sort of signs should we be looking for to exit a trade? What sort of signs should we be looking for to get into a trade? And what obstacles may be in our way, and how do we plan to tackle them? This is all plan of the planning process, but a lot of traders fail to do so and result in actually making, impulsive decisions due to the lack of planning that they did, before their trade. So let's just get straight into this webinar. We've all heard the quote, failing to plan is planning to fail. But the one part I really like here is hope is not a plan. And if you be truthful to yourself, the majority of you are hoping. You are hoping that the trade turns around and heads into profit. You are hoping that the trade is going to be right. You are hoping that this trade is going to be a winner. You're hoping that you can flip your account or whatever else it may be. You're all living off hope, okay? And when you think about it, hope in itself is quite, it's quite a high emotional feeling. We tend to, especially when a trade is turning against us, we kind of hold on to this hope and put so much weight on it that it nearly embodies us and takes control of us. And then people wonder why, when we do eventually then hit our stop loss, because we didn't take the necessary action, we then spiral out of control. Our emotions are completely out of control and causing us to make even more impulsive decisions, causing us to put even more weight on hope again, saying, I really need this trade to be a winner. Now, obviously, this doesn't come into just planning. It comes into a lack of confidence and understanding your plan and probably having a plan in the first place. But this is the one thing that I always see, that people are relying on hope instead of actually planning. And what they don't realize is that hope is not a plan. Before anything else, preparation is key to success. Another thing, preparation is the key to success, okay? See this here, write it down and remember it. All you need to do, okay, if you are coming to the charts on a day-to-day basis and you are opening up your charts without any planning from the night before, without at least, even 15 minutes planning before you're looking or scouting for a trade and really understanding what you need to do next, you are not planning your trades accordingly. If you are getting into a trade and then placing your entry, placing your exit, and then asking yourself, okay, what is my exit plan going to be? Where is there possible friction in the market where my trade may, come against some obstacles? If that sounds like you are not planning accordingly. You should have your game plan set before you go into that trade. You should be placing that trade and then acting on that plan accordingly. And this is how you're going to react to the markets, or how you're going to trade the markets with a lot less emotion over those decisions. Your emotion is no longer going to be in control of your decision-making process, because before you got into the trade, while there was no risk involved, you were able to think clearly and plan ahead. This is the whole point of planning your trades ahead of actually executing that trade. Because if you look at it, if trader 1 over here versus trader 2, okay, trader 1 plans his trades, or he or her, whoever it is, we'll just use he for this example. Trader 1 plans their trades before they execute the trade. Okay, and trader 2 plans this while the trade is open. Now think about it. Which trader is more likely to be thinking in a flow state while planning out their trade? Obviously trader 1. Why? Because there was no risk involved while they were going through that decision-making process, while they were analyzing the data. Even if they do find some of that information threatening from previous trauma of blowing accounts, if they're actually analyzing and planning ahead before they even open the trade, they're more likely to be thinking more in a flow state. And this is the whole point. Preparation is the key to success. I love using military analogies, or just looking at the military in general, looking at their tactics that they use on a day-to-day basis when it comes to routine, when it comes to planning as well, and just discipline overall, when it comes to detail. And I think looking at the military is a brilliant way to embody some of their characteristics and bring it into your actual trading itself. Make time for planning. Wars are won in the general's tent. I often use the example in backtesting. When you look at soldiers, they are constantly training. They do so much training over and over again. The reason for this is that when they go into a live battle situation where there is actual real, when their life is actually on the line, that's going to be the highest pressure they have ever felt in their life. But if they're planning in an environment, or if they are testing in an environment and practicing in an environment that is as close to the real thing as possible, where they have to make decisions on the spot, where there is, chaos all around them, where they have very stressful situations where they need to try and problem solve. If they are doing that in training over and over again, and replicating those training sessions as close to the real life thing as possible, they are more likely going to be able to execute on that plan as they go into actually real life war. And I think that is the exact analogy we should be using and bringing that into our trading. Because when we look at backtesting, and we'll go back to planning for a second now, but when we look at backtesting in general, if we are able to replicate that to the live conditions as much as possible, when we pull the trigger in our actual live execution with real live money, we're less likely to make a trade. And that involves seeing the fluctuations of your P&L, using different Forex simulators that actually allow you to see that, and that allow you to actually make decisions on the spot. And I'm not talking about just TradingView replay here. A Forex simulator, for example, is a really good one where you can actually see each tick of the candle, and you see those fluctuations, and you're more likely, if you trade and backtest within those situations, you're more likely to build that mental strength. But like I was saying, I believe looking at the military in general and the way they plan ahead of everything, and they have a plan for every single obstacle. So no matter how bad it is, there is a plan in place for that. And that is exactly the way I want you to look at each trade, that you're planning ahead constantly, that whatever can happen, will happen eventually. And as long as you are planning ahead all of the time, you're going to be one step ahead and more likely to come out on the other end. But when it comes to the military overall, what they're constantly using is checklists. And this is something that I am constantly sharing within, my mentorship program with the traders, that when we're executing, they trade the same strategy as me on a day-to-day basis. And we call it the breaker system. And what we're doing is constantly we have a checklist, and that checklist is given to all the members, and they know every single step that they need to take from the second they arrive to the chart, from the second that they're getting ready to execute a trade, from the second that they're in a trade. They know exactly what they're looking for, what they need to do, and what sort of signs they'll be looking for to exit, to manage, to take profits, whatever it is. And this is what I'm trying to tell you, that when you have this plan, when you have this checklist in place that came from the data collection process, that you understand your strategy in so much detail, it allows you to execute with confidence with a checklist, okay? And the checklist literally came from, these military practices in the Air Force. They ensured that airmen performed their duties in the correct manner and sequence. Even experienced pilots benefited from this tool. And there is plenty of experienced traders that still use a checklist type of trading plan. Now, we all know that, in theory, we should have our trading plan printed off and left in front of us at our desk, okay? But the problem is that sometimes we have a trading plan that's pages and pages long, that it's just not efficient enough to use on a day-to-day basis. What I want you to do is I want you to, yes, put in the work, create a lot of detail around that plan, and make sure that it's simple. The rules are simple enough to understand that you can execute flawlessly. But if you can't explain it to your mother or your father or your son or your daughter or whoever it is in an elevator ride itself, how long, if you take the elevator from, if you take the elevator from floor 1 all the way up to floor 20, what is this? Let's say it takes 90 seconds, and this is you, this is your friend Mary or whoever it is. If you can't explain your strategy very simple to Mary, who has very, very, very basic understanding of the market, your plan is probably not simple or detailed enough to actually trade on a repeatable process, okay? And that's the whole point of this. We want the strategy to be simple but detailed enough that it gives it edge. But the whole part of the simplicity is to allow it be a consistent, repeatable process that you can arrive up every single day, and that plan is just repeating itself over and over again, letting the compound effect, letting the edge do the hard work for you. And this all comes down to necessary planning. Okay, so what I want to talk about is, what should your checklist include? Now, everyone's checklist is going to be very, very different, but think about it. It's don't overcomplicate these things. As humans, we tend to overcomplicate everything. It's the basics of your trading plan. Okay, what is a trading plan? If you don't know what a trading plan is, you really, really need to go back to the basics, and you shouldn't be trading the markets. It's as simple as that. Because what did I say to you 2 moments ago? Hope is not a plan. If you don't have a trading plan, you are trading off hope. And hope is not a plan. Hope is the quickest way to a blown account. Your trading plan is your guardian angel and blueprints in the market. It is as simple as that. It is looking over your shoulder and guiding you through this storm, telling you what you need to do next, because you hopefully put in the work before that to understand it in great detail, tested it over a few years, tested it over various instruments, and then dialed in on those best instruments, dialed in on those best setups, and became the best at trading them, doing less but doing it better than everyone else. We want to use that trading plan like a checklist. So this can basically help you to stay focused on what you need to do next, or if a trading opportunity is valid, it's helping you to execute with confidence to pull that trigger. Because think of even the psychological, benefits behind the checklist. If you have a checklist, Okay, this is a shocking drawing, but you get what I'm saying here. If you have a checklist and you see your entry, your exits, you know, your management, your risk, whatever it is, all of your credentials that make up your trading plan. If you see this and before you enter a trade, you go, yes, I have this in place. Yes, I have this in place. Yes, 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 etc., etc. Once you see this visually, and you know, obviously you've put in the plan to actually test these details. So then once you see this visually, you're going to be more likely to execute with confidence. You're not going to have that problem of trying to pull that trigger. You know, if you have a problem pulling that trigger right now, it's either down to a lack of confidence or you're risking too much, okay? And the lack of confidence is obviously a lot deeper than just having confidence. The confidence is going to come from constantly executing your trade. So you probably don't have enough life experience in the first place, but you probably don't understand your plan on a deep enough level as well. If you're able to just go through this checklist and go, yep, that's a trade, okay, enter accordingly with the correct risk, etc., then you're in that flow state. Then you have that confidence in your plan. It's just playing the odds constantly, letting the edge do the hard work. So think about it. Look at your trading plan and ask yourself, how could I put this into a checklist that would allow me to put it into 6-7 points or something like that? You know, max 10 points, I would really say, where you can just tick it off. Tick it off, tick, 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 and you, as long as all the credentials of that checklist is ticked off, then you can enter the trade. You know, and this comes down to even when we're opening a trade, okay? So when we're about to place a trade, and let's just say, for example here, I'm entering off this bullish candle here, off this area of support, okay? And I'm looking for a move up. Now, when we look at this move here, we could say that this is, you know, an area of resistance. And the majority of people are going to say, oh, well, I'm going to be putting my target up here. Okay, all they're looking at is this movement here. Okay, I'm going to be looking at my targets here. And what they're going to do is they're going to hold that trade all the way to here. Now, think about the psychology behind this. What you're basically telling me is that you kind of know where the market is going next. You are picking such an exact point in the market that you're saying, okay, well, you know, I know the market is going to go here. I know, let's just say if this is 40 pips, okay? Let's just say you're looking for 40 pips here. You're more likely to, the majority of you are saying, oh, let me get these 40 pips in total, without looking to the left-hand side and saying, where are my obstacles? Where is this trade possibly going to meet some sort of friction that may cause it to slow down, that may cause it to correct, or whatever it may be. And even if that market decides to continue to your target, knowing where these obstacles are will allow you get through these periods where the market may need breathing room or correct itself before seeing the next phase of that impulse. So it is very, very important, once again, to plan. And like I was saying here with these 40 pips, you don't need these 40 pips. If you're planning ahead, you can say, well, look at this consolidation period here to the left. You know, it's fairly likely that coming up into this area here, so between here and here, we're probably going to see some sort of reversal, or I should at least be planning ahead to keep an eye out for a lack of momentum. That, yes, okay, if the market decides to burst through, I'll manage that trade accordingly. We may get those 40 pips, well done. But if we start seeing a lack of momentum here, it's kind of creeping off, well then you're better off actually taking some profits at least, or managing that trade accordingly and actually closing the trade. Because you're much better off to get paid than just trying to be right. And this is where that saying comes from. It's not about being right, it's about making money. Okay, take your money, walk away, you're done for the day. Your job is literally done. You made money that day, walk away. Stop trying to spend all this time on the charts. And when you're spending it, make sure you get paid. Okay, look for the obstacles that your trade could meet and then act accordingly on that. And that is all got to do with planning. And as you can see here, this is exactly what's happening here. We can see the market came up. It came up with a lot of force here. We can see a lot of momentum behind us. And then all of a sudden, you would be saying to yourself here, okay, well, I'll start managing the trade accordingly. We're in that area that I was talking about where we experienced some consolidation before. As markets approach different areas of consolidation, they tend to act as areas of resistance or support or, whatever it may be. So I'm going to keep that in mind. And as we can see, market came back up into that area of consolidation, and then we saw the momentum slowing down. We consolidated in here and then broke below that consolidation. So that would be your first sign to get out, or at least take some profits off the trade itself. A basic blueprint for planning ahead. This is what I like to use. This is something similar that the members will use on a day-to-day basis, is using these 4 different basically 4 different steps to planning the trade ahead, and making sure that you have all of these in accordance to your plan. Okay, so it's basically all lining up with your plan. This comes down to the price levels, where the market is sitting at that time, then some sort of timing itself, and then some fundamental driver. When you have all these lining up to create some sort of trading opportunity, you're more likely to be on the right side of the market, because you're bringing everything together that can create a trading thesis in the first place. So let's break this down and get a better understanding of it. Price is all about what is my point of interest. Okay, so why this level over another one? And let's just use support and resistance for an example. When we look here, where are the strongest areas of support and resistance? Well, we can see here plenty of taps, no real arguments here, and then if we look at resistance, we can see plenty of taps around this area. Okay, these are the ones that stand out. Now, obviously, I would recommend to have rules for, identifying these levels as well, but let's just skip through this and understand the pricing aspect of this. So first of all, we have a price point. We have a point of interest that we want to operate on, okay? Patterns can be something that is, relevant to price as well, because, when we have, let's just say, supply zones like this, supply and demand zones, whatever it may be, supply and demand zones, these are patterns themselves, and they focus around an area of price. So this is included in price. So now we have our point of interest. So that's the first part of planning. We have our point of interest in mind. Next is the price positioning. This is a lot of the time people will tend to overlook this because they don't understand it. Where is price located? So for examples, majority of my trades, especially from a day trading point of view, are going to come from new high or lows of the day. So it doesn't matter what day it is, but my trading opportunities are going to come in as a new low or high a day is being put in place. I'm rarely ever going to be trading on the inside of this, okay? Unless I've seen that, okay, yes, we're on some sort of a trending day and we're just going to continue breaking those highs on the way up, okay? So it depends on the different variants or what particular day it is, but 80% of the time my trades are going to come from the low or the high of the day, because I know that's where the biggest moves are being generated from a day-to-day basis, where they're being originated from. And if you want to argue with me, you can do that all you want, but you can go into your chart and you'll see that basically 98% of the biggest moves on your chart will originate from the daily high and low. So next, where is price located? I can see here Monday. I also use particular days to understand where we're sitting in terms of the weekly range, and then being able to profit from that as well. So I know on a Tuesday I'm looking for some sort of reversal, and that's exactly what I'm seeing here. So we're Tuesday. On a Tuesday, I know we're looking for a reversal, so I'm going to be looking from a high or a low of the day. So we're also saying what phase are we in? What phase are we in could be the price positioning as well. So when it comes to phases, you can look back at our most previous video on how to, or our most recent video on how to maximize gains in the foreign exchange market. And this will talk about the different phases that can occur and how to tackle them and the different characteristics that make them up. So as we can see, we're clearly in a range here. In a range, if you understand the basis of a range, we're going to be selling at the top of the range, buying at the bottom of the range in theory. So all of that comes into play here. So now I have price positioning. I'm at the low of the day. I'm at the low of the range. I'm I'm coming to a strong area of support, and now obviously I have my price levels as well. My price levels in actual play here as well. So next, let's take a look at what's next. Next, I want to be focused on timing. And for me, timing and the fundamental drivers are one of the most important, or the two most important things for me personally. And I believe in general, they tend to be the things that people tend to shy away from. One, because they don't understand this. And two, it's probably, especially when it comes to the fundamental things, extremely boring for you. Because when you first started trading, you believed that trading was all just about looking at this fancy art on your chart, and that some sort of trend line or some sort of order block or some sort of whatever other bullshit they're telling you nowadays was going to help you and was going to make you money on a consistent basis. But I am sorry to tell you that drawing a line on the chart is not why the market is moving. It is not the driver of the market. It makes no sense to be putting this much emphasis alone on a specific price point without understanding what is driving that market, what economy is dying, what economy is, strong at that given moment, and making calculated, logical decisions from that. So now that we have our points of interest, our price positioning, we're now looking at what time are we taking this trade at. And especially when it comes to a day trading point of view, you're going to be looking at pre-London, London Open, pre-New York, New York Open, pre-Asia, Asia Open, new NYSE Open, whatever it may be. They're all the high volume times of the day. And in our actual course, we have particular systems designed around every single a timing period there and how to trade them specifically. So we know by our checklist what we need to do at any given time, all depending on the price, the price positioning, time, and fundamental drivers. So ask yourself, what session do we wish to trade? Okay, well, we're lining up accordingly with price and the price positioning. We're coming into London Open, so now we're going to be trading the London Open. So we have a high volume time coming into play that can possibly fuel this reversal. Timing can also come into daily, weekly, hourly candle closures, because even if you look here as well, we also have another confluence of this hourly flip. That this last bearish candle here closed bearish at the level, and if you look at any reversal, what you're going to see is that if we're at a specific price level that we're going to reverse, allow the candle to close like here, and then look within. So if this was the hourly candle here, you're going to be looking for the next 15-minute candle to close bearish engulfing, bearish pin bar, whatever it may be, and that's going to be your entry signal to catch this move, because it's going to be the flip you're looking for. The bullish candle is closing at the resistance area, so if it's going to reverse, it's going to be the next candle that closes bearish, and this allows you to time your trades a lot better as well. If you're trying to trade or get in the reversal while the hourly candle is still open, and this is the 5-minute chart, you're going to experience a lot of fluctuations because there's still a lot of movement that could be moved there. However, when you allow that hourly candle to close and then say jump down to your 15 minutes or 5-minute chart to catch the next 5 or the first 5 or 15 minutes of that new hourly candle, like I'm showing you here, you're more likely to catch the flip when it's originating down here. And then you have a strong confirmation that, okay, yes, I can continue to hold this higher, which you saw obviously here. So we had the London Open and we had the hourly flip. So now we also had an essence of time into our checklist. Okay, we can tick that off as well. Next is a basic fundamental driver, okay? People tend to overcomplicate the fundamental side of things completely. Let me tell you, understanding fundamentals is not as hard as they make it out to be. Will it be boring? Possibly, if you're not really interested in that stuff, but I really do believe it's necessary. Majority of you will say, I'm a day trader, I don't need to focus on the fundamental drivers because I focus on more fluctuations. But let me tell you, understanding the fundamentals is going to allow you to catch these moves. Alright, and these moves, instead of these tiny little choppiness bullshit in here. Why would you want to trade that? I want to trade the big moves, the actual moves in the market. I don't want to trade the accumulation phases. That makes no sense to me. Why would I put that unnecessary stress on my shoulders when we're trying to get rid of as much stress as possible and allow us to think in a clear state. So understanding the basic fundamental drivers, waking up each morning, reading some news, you'll get better the more you read over time. Start searching terms that you don't understand. Start searching how interest rates affect the market, how inflation affects the market, how, gold is a safe haven, yen, Swiss, whatever. Understand the currencies. Understand what is happening to them. Study the Fed. Understand how important they are and how it fluctuates price. This is what's moving the market. And some of you will say, well, I'm profitable without the fundamentals, and that's okay. But then I ask, why would you not use this amazing information that's in front of you that is ultimately going to benefit you in every single way? Looking at the news and studying the news, there is nothing negative to come from it. You are just really, let's be real, being lazy, and you probably don't understand it. So you stop after reading it for 2 minutes instead of actually searching the terms you don't understand, or looking at, if there was an energy crisis like there is now, what happened before when there was an energy crisis in a different economy, and how did the market react to that? Once again, you're failing to plan. You're not actually putting the work in to plan these trades ahead. And it's very, very clear to me that a lot of you are lacking planning from, on a day-to-day basis. So look at the fundamental drivers, and, the trend, obviously, from a daily point of view is going to come into play as well. When it comes to trading reversals, not every trader can do it. And, it does take some experience and skill. But especially when you see a trend and you see the fundamentals lining up with that trend as well, why the fuck would you trade against that trend? Why would you put yourself in that situation? It makes no sense. These are the trades you want, the ones that move very, very quick and very, very fast, the clear moves, the moves that are the dominant moves of the market. They're the ones that I want to trade. And they're the ones that have the fundamental drivers behind them, the trend behind them, the timing behind them, the price positioning behind them, and those points of interest. All 4 things that I talked about. Price positioning, time, and fundamental drivers. So when it comes to actually planning, remember that it is an important process. Keep it simple and reduce the friction, okay? When I say friction, I mean the friction for your trade, and reduce the amount of mental friction that comes into play as well. In other words, think less, okay? React more. I don't want you sitting at the chart saying to yourself, "Ooh, should I be closing now? Oh God, I don't know. Oh, I might leave it for..." No, what the fuck are you doing? Keep it simple. Have rules in play that you say, no, I don't need to close yet because this didn't happen. Or, oh, I need to close because this happened. You have set rules in place. And obviously some discretionary trading is going to come into play every now and then, but you're still going to have that confidence to execute on it, okay? Logical thinking when it comes to your take profit and stop loss placement. Like I said here, there is no need to aim for all of this. All you need is those 20 pips from here to here. That's all you need to make money, and you're done for the day. And from a consistency point of view, when it comes to executing, you're more likely to get the 20 pips rather than trying to get the full 40. Also plan ahead when it comes to your risk appetite. Like I was saying, you already understand your risk appetite before you enter the market. So don't go against that. And understanding your risk appetite comes from stress testing. A lot of the time people will say, oh, the traders that risk 3-5%, they're greedy. Well, let me say this. Would you say to an athlete like Usain Bolt that you're greedy for wanting to always win, or that you're greedy for winning so many, medals? No, you wouldn't. They have different experiences than the beginner runner, for example. And it's the same for, experienced traders who may understand when they can leverage more in a position or when they can add more to a position. They have certain credentials for that and certain management techniques. But at the end of the day, they understand their risk appetite because they went through the necessary stress tests. And it comes down to this graph, okay? When you're looking at, your risk appetite, you want to find this, okay? You want to find the middle. Okay, on this graph, you don't want to be up here where you're almost reacting. Your risk is so small, so you don't care, and you also don't want to be up here that the risk is too high that you you can't execute flawlessly at all and you end up closing the trade early. You want to be in here that allows you to execute properly on a day-to-day basis with where you still understand the risk that is involved, but you're managing it correctly. You want to be in you want to have the risk appetite that allows you to react within a flow state. That is what I'm trying to say here. You don't want it too much where you can't react at all, and you don't want it too little that you don't actually care about managing the trade or taking a loss and you're just executing for the sake of executing. You want to at a point where you're able to just execute that plan accordingly. And that's understanding your risk appetite and should all be planned ahead. Like I said, planning the risk ahead and understanding what risk you need to take now. Does your plan involve fluctuating your risk at all? Well, understand what risk you need to take on this particular trade according to your risk management plan. And once again, the fundamental drivers. Are you aware of what is happening around the world today? Did you wake up and just look at your charts and say, oh, we're in a downtrend? Or did you just have a quick scroll over the news, see did anything happen while you were sleeping, and get a better understanding of what to expect today from a fundamental point of view as well, an economic calendar point of view? All of these things are necessary. All of these things are going to help you with your trading. So what I want you to understand is start planning ahead. Start planning your trades accordingly and making the necessary, decisions that you need to make on a day-to-day basis. Because when you start planning, you will start to see huge differences in your trading. You will start to see everything coming together nicely. You'll start to see changes in yourself as well. You'll notice that, okay, I'm starting to react more. I'm starting to think less. And that is that flow state that we want you in. Okay, we want you in the flow state where you've so much confidence in your plan because you've done all the planning before this, that now all your job is to do is to execute on those rules.